Hey everybody, welcome back to our weekly podcast. My name is Patrick Tan, General Counsel for Chain Argos, the blockchain intelligence firm. And with me, as usual, every week, John Ryder, our CEO and Chief Data Scientist. And this week, what we have to talk to you about is a couple of stuff. A bit of data as well that we're going to be covering this week. And of course, talk a little bit about memories from memories of previous blockchains. All right, but before we get to that, let's talk about what we're going to talk about today substantively. We're going to talk about Prometheum. Not to be confused with the movie Prometheus, I think.
Well, I think he's the Greek. Well, anyway. Fine.
Anyway, so then Uniswap Wells notice. Interesting bits of legal discussion over there. And then we'll talk about, volumes of some stuff that we would have discussed in the first two topics. So we're just going to leave that hanging right down to the back. So, all right, John, you've done all the homework because I always come to these things unprepared. But tell me a little bit about Prometheum. What's going on?
Okay, so this is this U.S. broker-dealer, a special purpose broker-dealer, whatever, set up in the U.S., and they've claimed publicly for a while now that they think they can do crypto trading under all the existing laws. And there's a lot of speculation about whether or not that's really true and how they're connected to the government and they're, sort of friendly with traditional finance, the SEC, whatever. There's a lot of accusations in all kinds of directions, and these guys have spoken in a couple of hearings, and they've issued statements, and I think it's fair to say that they have not been extremely specific in how they were going to go about doing a lot of these things, other than to say, we think it fits under the rules, and we have a procedure. There was I think it was an Unchained debate interview with a couple of people at once, one of the Prometheum guys and a guy from Paradigm, I think, and I mean, they both look like they were very comfortable talking about some of the issues, and there was some overlap where one guy looked a lot more comfortable than the other. It switched areas depending on the subject, and sometimes they just seemed to completely disagree over what they both thought was an obvious answer. I know that feeling. But no real specifics were presented. So they've now said that they've launched, I believe soft launched, although for financial services, I'm not sure how that works, a custody procedure for Ethereum. And this is roughly coincident with the Ethereum ETFs being approved in principle. Now they have to go file S1s to actually go do them. And I don't know if those are connected or not. There will be conspiracy theorists who say that they are because they believe Prometheum is some SEC TradFi sneaky way of taking over. And we don't know exactly how they plan on working things, but we have some ideas from documentation that is out there and filings, the rest of it. They have the basic broker-dealer filings in the U.S. There's an X17, and they have their ADVs. And there's other stuff that gives you some sense for what they're doing. And they've made some public comments about reliance on Form Ds and wrapped tokens and stuff like that before. So I'm going to speculate on how their thing is going to work because this is consistent with their statements. So they will take custody of people's, at this point, Ethereum, and then they will allow trading of Ethereum on their trading platform. So they have what in the U.S. is known as an ATS. I think a Singapore equivalent of that is an RMO. It's a thing that's a venue for trading. It's not a stock exchange. It's not an OTC marketplace. It's somewhere in between.
It's a wet market.
Well, I guess I don't know that anybody selling fish is in fact a registered market operator, but the Singapore version is a registered market operator. It's what it sounds like. It's a thing that runs kind of a market, and it's a little bit soft because it is a little bit soft. You have a lot of leeway in writing a rule book. You have to get your rule book approved. And ATS is a similar thing. A lot of the places where equities trade in the U.S., for those who are familiar with Flash Boys and that kind of HFT stuff in general, are ATSs. They're alternative trading systems. They're not the New York Stock Exchange.
Yeah.
They're some other thing that's a bunch of computers with some different rules and order types and whatever. Okay. So it looks as though they're going to allow trading of that on their platform, and they've said repeatedly, publicly, that digital asset securities only. They're going to handle securities. Ethereum is not... there is no registration statement for Ethereum, right? So either they're going to finally employ whatever procedure they have for getting a registration for a security they're not the issuer of, or whatever their procedure for onboarding a security is, a thing onto a securities trading exchange where there's no documentation originally for it. The simplest version of that, and what I bet they're going to do, is wrapping it. So they can hold custody of the Ether, and then they can allow people to start trading Prometheum wrapped internal ether, something like that. And then you've got an exchange that would be subject to standard market manipulation, surveillance, and all the securities, whatever, rules stuff. Conceptually, this is what everyone has always been doing, because when you deposit your tokens to Coinbase, Binance, Kraken, whatever, what you're trading, as everybody understands, is
Not the actual
effectively
underlying.
exchange wrapped, whatever tokens. So if they just fill out the paperwork for Prometheum wrapped, non-transferable, non-public blockchain ether, I hope that's not the token symbol, because it may be too long for our database, then they're off and running. That's pretty straightforward, and that's what I'm guessing they're going to do. Also, as you commented earlier, an Ethereum ETF, a Bitcoin ETF, is just another form of wrapped token with a securities registration, right? So this would be sort of an internal-only database entry type thing. They wouldn't have to open it up for external trading. I don't think there'd be any reason to do that. So these guys are probably going to launch something like that fairly soon, and the use of what looks like wrapped tokens are going to be a theme for the entire podcast this week, because that's going to come up in a few minutes in some other areas as well. Yeah, so we're curious what's going to happen there. If they're not doing wrapping and they're just doing some kind of bootstrapping procedure to get it traded on the exchange, functionally it's still wrapping. So all of this sort of discussion still applies. And it will also show that it's possible easily to take a crypto thing, stick it in some kind of a legal bucket. Custody is some kind of procedure for owning things, and then to put a securities regulated wrapper around it. I will maintain that this has always been possible because no one's ever stopped you from setting up a trust that contains these assets and registering shares in that trust, certificates out of the trust, under whatever securities law, basically everywhere in the world.
That was the whole fundamental of like collateralized debt obligations. There are all sorts of things that you can wrap in.
It goes back to the beginning of the Treasury strips, and all kinds of stuff's done this forever. That's never been challenging. GBTC has been that forever. Just the rules that were. Yeah.
I've always thought that. I mean, and you know, you can debate me on this one. If you accept that Ether ETF is a security, and that's why everybody's getting so excited, which also boggles my mind, because you don't want these things to be called securities, yet you get really excited when they become ETFs. Well, no. But if that's a security, then how is wrapping by a different flavor? I mean, like, so, you know, I mean, what makes a burrito? Do you have to use...
That's right.
You know, a tortilla?
That's right. Now, that does not mean that the government would approve a public listing of shares in such a trust. It doesn't mean that.
Oh, yeah.
Right. But it certainly means that you could start somewhere and you could maybe make some progress. So how long this will take to be available to retail, if they're doing something like that, they're doing something like that. So I guess we'll find out.
All right. Tell me about the Uniswap Wells notice.
So this connects to the Uniswap stuff immediately. So we commented, I believe it's 2 weeks ago, Uniswap received a Wells notice.
The Wells notice, which not much information.
Yeah, they didn't tell anybody what the Wells notice was. I believe the Wells notice itself has still not been made public, but their response was filed, and it's, 15 pages or something. So you get some sense for what's going on there. And it's quite interesting. So there's some discussion of the difference between the front end and the back end. We've talked about this before, where they're asserting that all the matching happens on the back end and the front end is just a convenience feature that doesn't financially mean anything. Fair enough. And that they assert a number of things about how the protocol works. It's immutable. Fine. The team has deployed it, but they don't collect any money from it. Fine. They discuss the governance procedure and the rest of that and how it's decentralized. Fine. But they make a number of comments that are interesting to me because I think they indicate either that their position really is extremely weak or that there are miscommunications between the legal team and the tech team, or somebody's not making sure that this stuff is lined up properly. Because one of the assertions they make is that it's not a central order book, a book full of, in this case, limit orders, except that Uniswap v3 most definitely functions, at least in part, as a central limit order book, because you can enter what are functionally limit orders that their own documentation calls limit orders in Uniswap v3, which has been around for a while. So I don't know why they're telling the court that their system does not have an order book when it does, and that's a feature they've touted. And to me, that suggests that the team writing this stuff's understanding is a pure LPing based Uniswap v1 and v2 view of the world, where you can have a conversation about whether or not it's an order book that's processing orders and matching trades, whereas Uniswap v3, again, their web page tells you how to enter limit orders. So the system, if full of such orders, is an order book because that's what an order book is. I was astonished to see that assertion. I thought they were going to say they're not, matching whatever trades because it's all non-custodial or some
It's a strange,
like that.
it's a strange tack to take. I'll give you that. It feels, and as more of these legal troubles start coming out, it feels oftentimes that the attorneys don't communicate well with the people who are doing the software development, and the people who are doing the software development have maybe some kind of difficulty articulating what this means. And we have this all the time internally. I constantly ask for more specificity when none could exist.
Well, read the code. Good luck.
Exactly.
You can have a 700-page document. That's up to you.
And hence that I can see why this might be a challenge.
Although, as we're the next subtopic here within the Uniswap claims, I think makes it even clearer. Although I will say the fact that Uniswap v3's touted the fact that you could put concentrated liquidity, you could put limit orders, which they call limit orders on the website in the system. But anyway, that's not a miscommunication. That's a failure to communicate.
Yeah, that's actually in some ways worse.
Yeah.
Maybe. I don't know. Okay, finally. John, you want to take us through some data?
Oh, no, we'll do that second because we have to set up the data related to Uniswap.
Oh, okay. So yes. I forgot about
they
that.
claim that the platform processes primarily, because so they're saying they don't list any securities. And of course, Uniswap is permissionless and the number of tokens traded is massive.
Yeah.
So we're not going to sit here and go through the all list of tokens because that's boring. But they do say the vast majority of business is conducted in Ether, wrapped Bitcoin, and stablecoins, none of which are securities. Once again, I think there have been some, at best, miscommunications because Uniswap doesn't trade Ether. Uniswap trades wrapped Ether. And they're very clear about this. The code is very clear about this. It only trades ERC20 tokens. One of the reasons there's so much wrapped Ether out there is because all of these trading protocols can't handle Ether. They can only handle wrapped Ether. Wrapped Ether is, there's different versions of whatever, but the most common one is a particular product, some Ethereum smart contracts that do this. Fine. Wrapped Bitcoin, on the other hand, is a product that a sort of consortium manages, but the tokens are held in custody, I believe, by BitGo Singapore, I think, does that.
Yeah.
At least that's the address on the BitGo that's signed the
maybe.
documentation. But BitGo's a licensed custodian that does the stuff, and that's all fine. Now we're going to come back to the earlier Prometheum conversation, right? If you have a custodian issuing receipts for assets in its custody that you're trading,
that's a security.
Those and that's not a U.S. law peculiarity.
No, yeah.
Generally speaking, these things are securities. I think it was called trust ownership certificates, something like that. We quickly checked the Securities Act, the U.S. version of this. Yeah, those things are named specifically there, and those are. All over the documentation for wrapped Bitcoin is the fact that there is a custodian, and it takes them time to wrap and unwrap, and you have to onboard, and it's a trust company, and the trust company shares beneficial ownership, whatever, of the underlying assets in exactly the way that you would expect, let's say, for example, an ETF to work, right, or any other trust structure for owning assets. Whether or not wrapped Ether qualifies because it's a smart contract native to the Ethereum blockchain, there's lots of other wrapped tokens that trade on Uniswap. There's wrapped stablecoins, certainly the versions of Uniswap that traded BUSD on the Binance blockchain from a long time ago, call back there. Those were not only almost certainly securities, but there's still ongoing government action enforcement against, was it Paxos and Binance and stuff for those violations. And I think people generally accept that most forms of custodially wrapped tokens are securities under basically all of the legal systems around financial centers in the world that have a securities concept. Because there's nothing more securities than here's a bunch of assets, I stuffed them in a trust, and now I'm going to trade ownership shares in that trust. That's the point here. And those aren't even things with the Howey test. Those are things where the Securities Act says a big list of stocks, bonds, this thing is on that list.
Yeah.
And that is where we move into the data because we're going to look at the amount of this stuff that trades. Right. So maybe I think we'll start. Oh, we're on this screen. Sorry, we'll start here. So this is just monthly volumes in token, not in dollars, for Wrapped Bitcoin and Wrapped ETH. So again, this is the custodial product. We're not suggesting the custodian is doing anything wrong here. We're actually, that's kind of irrelevant. I'm sure they're holding the tokens fine, whatever. The point is that if their securities registered or not registered, foreign or domestic or whatever, trading them is engaging in that kind of activity, right? So these are transfers. It's not clear that transferring them is a problem. I have no idea. So you're looking at, what is this? That's 1 million Wrapped Bitcoin transferred in that month, and there's 2 million. These are large amounts, right? I don't know, different time periods. The price here is, let's say, an average of $20,000, $30,000. So, these are billions and billions of dollars. Now, this is total for Ethereum, but, that's a meaningful amount, right? ETH, we've got, roughly 10 times as much. So you're looking at 100 million ETH, right? So you're looking similarly at actually more, whatever, in dollar terms, but amounts that are so large that if there is an issue, it's a substantial issue. Actually, it's interesting, the shapes. Yeah, actually, that's quite interesting because this is a lot flatter. There's a little bit of a spike here around. This is Luna, right? This is the Luna weekend. This is May 2022.
Yeah.
But it's reasonably flat otherwise. Whereas this, Luna's in here. Don't even really notice it. Higher, dip, back up, down. Different shapes. Anyway, this isn't about data analysis. All right, so there's a lot of information here, actually more than you need to see, but what matters is the volume amount. So this is various Uniswap forks. I think this is different versions of Uniswap v3. Yeah, different version of Uniswap v3. And the price chart doesn't even matter. This is a thing that's already part of our demo.
All of these are the different pools.
Yeah,
so you've got like the 0.05%
Yeah.
pool. You've got different fee pools, and this is just some of the.
So these are
It's insane
daily-
amounts.
These are daily dollar volumes. So 33,000 in that pool in that day, 43,000, 6 million on that day. It doesn't matter what the total is. There's meaningful amounts of this stuff going through, right? So if you're saying our system is fine because we trade primarily Wrapped Bitcoin, okay, well, if it turns out that that's a security, you're screwed. Certainly as far as that being a defense. And this is evidence that there's huge amounts of that going on. I don't think anyone disputes that the main stuff that trades through Uniswap are Wrapped Bitcoin, Wrapped Ether, and stablecoins. The question is merely whether or not some of those are securities. That doesn't mean that the Uniswap people who are being accused of doing bad things here are owners of that protocol. That's a separate question. It was just fascinating that part of their defense is we're trading these things that are obviously not securities when to us some of them obviously are.
If it was just the underlying token, say ETH or Bitcoin, we could still have a discussion about that.
Yeah.
We could debate it with the SEC till kingdom come. But once you wrap it,
Wrapped by a licensed custodian. If that's
and
not
not
a
just
security,
wrapped by a dude off the street,
Yeah.
it's wrapped by a licensed custodian.
Yeah.
Oh, guess what? You've just won securities bingo.
It's very hard to understand how that wouldn't. So this is, I don't even know which particular bits of Uniswap. It doesn't matter. This is volumes of a different flavor. Oh, this is WETH instead of a Wrapped Bitcoin, whatever. So again, you're seeing huge amounts of volume. So on that day, there's $237 million in volume on that pool. Here, it's a bit quieter for 320 million. It's quieter somewhere. 114 million. The amounts are gigantic. Right? So
the fines will be so big.
well, it's not clear that this group is going to get held liable. The podcast this week is not about if Uniswap Labs, whatever the entity that's got the Wells notice, is going to get in trouble for this. We're just trying to make clear that people who are dealing in these wrapped tokens probably don't want to highlight to the government that the main thing that they're dealing in is these wrapped tokens, because it doesn't take very long. Also, BitGo, the custodian, I know they have branches all over the place, but it is an American company with a bunch of licenses in New York, and they will almost certainly answer the government's questions quickly and honestly because,
They don't want this kind of problem.
it tends to be what happens if you're a large custodian in the United States. So it'll be interesting to see how this goes, but it'll be interesting to see how this goes. I accidentally hit the stop button because I was on the wrong screen. There we go. We can edit that out Top Gear style again. So, I think wrapped tokens may be coming up as a real question for a lot of protocols going forwards. If people want to trade wrapped Bitcoin in the ETF form and in the wrapped token form, that's all fine. And they want to use an ATS, so it's all fine. But if you have somebody coming out and saying, I can follow all the rules, and the way I'm going to do it is by wrapping my tokens and registering the securities, and you have somebody else getting accused of running an unlicensed whatever securities exchange, and they're trading assets that are functionally the same as the guy with the license that's telling the government it's possible to do this in the old way, I think everyone can guess how that's going to end.
Poorly?
Well, it may end okay for the people who do the wrapping, but it may end not so well for the other folks.
And on that note, thank you for joining us. Thank you for tuning in. Thank you for the questions and the comments, the likes, the subscribes. We appreciate it. We appreciate you. Have a great weekend. We'll see you again next week. Thank you. Bye-bye.